economic instability, unclarities, and potentially major shifts within the global economy. Are we going to see major switches and changes in the capitalist mode? Are the markets and the global economy going to be altered in very significant ways? And how can we deal with all these things, and what kind of predictions can we make on this topic? All of this is going to be dealt with in this podcast episode of DEVLET magazine. So let's get started. In the global economy, we faced some major challenges and significant structural changes over the last couple of years, starting with the corona pandemic back in 2020. And when this pandemic started, obviously we knew that this is going to have some impact on economic conduct, and it did actually. It was kind of the first repercussions of this global pandemic actually happened at the financial markets, when the markets basically broke down, and accordingly the recovery was actually unexpectedly quick back at that time. But in the real economy, obviously some major changes occurred. Interestingly, the whole situation, and I need to kind of go into depth with this topic, is that back then, when the pandemic started, actually politicians and economists thought that consumption patterns are going to not change, but rather consumption is going to decrease very drastically, which actually didn't happen. But consumption just changed, and just a minor decrease in consumption happened. What I mean by that is that instead of going out, for example, due to the lockdowns, etc., people turned to their homes and spent money on furniture and hobbies and all of that stuff, and potentially also invested more into the stock markets. So these were very important structural changes that happened back then, but economists and politicians reacted to that by increasing the money supply to stir up further consumption, although there was only a slight decrease. But in more general terms, next to the recession, next to the inflation that we witnessed over the following years, especially during the last year, and also another stock market downturn, which is still not over yet, by the way. We still have the potential to see lower stock prices in the near future, potentially. But in the end, we entered into a phase of economic turmoil, and people ask themselves, maybe we are seeing structural changes that are going to last for a very long time, especially when we also think about the rising power of non-neo-European or European nations such as Brazil, China, Russia, and Turkey, for example, where kind of a common at some place, a common currency is debated, and infrastructurally, China is also pushing its own agenda abroad. So there are also very important economic changes that we might have there. These are more like the daily doings and the daily conduct within the global economic realm that we're dealing with, and people are quick to kind of pinpoint changes and structural shifts basically to those things. I rather have the idea or the tendency to say that these are actually reflective developments of underlying dynamics that are more embedded into wave theory and life cycle theory. In other words, it is not really that the BRIC countries start to get together, and inflation is suddenly high in many countries, that these are basically the triggers of shifts, but these are kind of the display that shifts, underlying shifts, and changing structures basically are already taking place. So changes are already occurring in an underlying fashion, and these are just the things that surface and are the results of major structural shifts. And this is a different approach. Obviously, I'm always looking at the broader picture, and I always tend to view things in the context of life cycles, so in waves, meaning that, for example, if a system, in this case capitalism, is very successful and can build on the success and extend it to a certain extent, then at some point it needs to experience a downturn in order to then grow again. So we can see this with societies, we can see this with different nations, where nations, they reach certain heights and then obviously turn into certain lows. And once they survive the lows, again, highs can occur. And the same goes for, obviously, economies. On a smaller scale, on a micro scale, for example, we have seasonal changes. In industries, for example, let's take tourism. In the summer season, tourism is obviously in certain countries much higher than during the winter season. And this is just a small or micro example of the whole economy, which has also structural waves, meaning that at some point the economy is doing better, and during other periods is doing worse. And if we move up yet another level, on the very macro level, and look at it as economic systems and not as national economies themselves, we also see that there are major waves and highs and lows that occur. And when we look at the recent history, and with recent I mean the last 100 years, we can see, and we just need to turn to the stock market to kind of visualize the development of the global economy, then we'll see that we have experienced major upward sloping curve in terms of almost every positive metric that we have in the economic realm, at least for the major economies, let's say for the major 30 economies. And even those who kind of lag behind, there is a tendency towards becoming bigger and qualitatively better equipped. And this in itself is no problem. But the reason why in this current situation we cannot expect the economies to further rise and to expand are the structural properties on the quality level. Even though there is an improvement at that level, we do not have a very stringent development on the intrinsic value that is being produced in those capitalist systems. What do I mean by that? If we look at how predominantly European and neo-European nations, such as Germany, the UK, the USA, Canada, Australia, and so on and so forth, how they go about economic conduct is that consumption is a very central aspect there. And consumption is built on, obviously, to a certain extent, also on manipulation or psychological manipulation, because it kind of suggests that you need certain products in order to remain relevant socially. For example, branded clothes or expensive vacations or any other status symbol such as cars, houses, in certain dimensions. These are things that are suggested in order to spur consumption. And this is also why luxury goods had such a wonderful, in terms of profits, such a wonderful decade, because as society pushes towards kind of exhaustion of the market of basic needs, for example, if everyone can afford normal clothes, a car, a house, and so on and so forth, the market or the range of products that can be continuously consumed without kind of without necessarily needing to be replaced, but voluntarily being replaced at that point, are luxury goods. It is not like you have a house and every 5 years, because you're bored, you're going to buy a new house. But with luxury clothes and even with cars and other status symbols that you actually don't really need, that do not further your existence in that sense, but you're only buying it to show off or to kind of feel better in the sense of you're standing within society. These products became more prominent and were pushed and kind of placed more prominently within the economies of those nations, but also in other nations such as India, China, and Turkey, for example. And these nations are also moving towards the trend of increasing luxury and basically products and services without intrinsic value. And this is something that capitalism is actually made for. And in the early days, obviously, especially after the Bretton Woods system, this worked quite well. The market was quite open, basic needs weren't fulfilled, so there was a lot to consume and lots to develop. For example, household machines and electronic devices and so on and so forth. But right now, and this is where it gets interesting and where my whole theory, the Rolex theory that I actually developed a couple of weeks ago and also posted on my website, isido.com. You will find the link in the description below, comes into play. And this theory suggests that at some point of capitalist development, the market is so exhausted that there are actually no more interesting and innovative products and services that would upkeep the level of consumption needed to basically expand the capitalist system. The capitalist system is not built on consumption in absolute terms, but in relative terms. So it means it always needs to, or it always requires all the participants to consume more than before in order to expand. And if you secured a certain level of material comfort, right, a certain habituation sets in, meaning you have a house, you have a car, and this is, for example, a very important milestone for a lot of people. And at some point, even though it was before a dream and basically something that they really worked hard for and were looking forward to obtain, at some point they're getting used to it. And at that point, your drive for more economic value, becomes lower, and this is endangering the system in itself. So in order for capitalism to survive, there needs to be a continuous push for more consumption in order to fill the void that is setting in with that certain habituation. And at that point, when the basic needs and the mid-level needs basically are all fulfilled, and you're just about to enter the last stage of fulfillment, meaning personal development and all that, which is actually a stage where consumption gets even more reduced, because a person who's self-aware and self-confident doesn't need luxury goods, even though this person is more likely to be successful at his job and get more economic means. This person is more likely to spend it on hobbies or invested in the stock market and so on and so forth. So before entering this stage of human development or personal development, in this case, if we look at it from an individual perspective, the capitalist system needs to kind of give you the incentive to buy luxury goods in order to, artificially keep up the expansion of the system and therefore the success of the system. But at some point, even with the luxury goods, even though they are inexhaustible theoretically, because there's always a more expensive watch, there's always a more expensive car, there's always a more expensive vacation that you can book. At some point, the marginal return of your spending is not that great in terms of the quality of life. So whether you drive a Lamborghini or a Ferrari at some point, and if you have 10 of them, is not going to make a difference of your lifestyle and your feeling. You're so used to it that you don't really need it. And this is just like the very rare example of very few people who have who are in the situation. And this is, as we can always see with celebrities, is where they have a decline in character traits. Usually scandals arise at a certain level of material wealth. And the Rolex theory says that if we have a certain level of material comfort on the aggregate economy, then we are more likely to experience a downturn or a recession. For example, and this is where the name comes from, if we look at the United States, or rather, for example, the Netherlands, United Kingdom, and Germany, for example, if you save for a couple of months, usually I'm just talking about the basic income, and obviously with some material sacrifice that you need to make at that point. But in general, if you save up to a year and put a certain amount of money aside each month, and you're working and you're saving the money, everyone can basically to a lesser or greater degree of difficulty can buy a Rolex watch. The idea behind that is, when we think about Rolex watches, we're thinking about basically a status symbol. Every watch is telling you the time, and the time, or knowing the time, is something, yes, to a certain degree important, but it's not essential. And therefore, watches obviously are status symbols. And whenever you buy an expensive watch, such a Rolex watch, there is a social effect that you're buying with it and that you need to show off at that point. Meaning, and therefore, and this is because the brand Rolex has developed into this symbol of wealth. But on the aggregate, if many people, and I'm not saying everyone is able to buy such a watch, even with saving up for 2 years or something like that. But with increasing aggregate wealth, more people are able to buy this watch with less difficulty. And what that means is that the market is exhausted to such an extent that either it needs an innovative drive or an impulse in the market in order to spur further consumption, or we are going to enter a recession, because at some point people are also going to turn away from these kind of products because they realize basically that this is not bringing them happiness, or is not a very intelligent investment of hard-earned money. And then a reorientation sets in, because at some point the capitalist system is, with its investment into the forecasted output, is not going to be sufficient to further expand. And when growth is not happening and is stagnating, at some point a recession needs to set in, because there's no one to buy the products anymore. And then it's kind of an amplifying effect that the trend and the rethinking basically leads to less consumption. So, yeah, as I said, an economic downturn is the consequence. Now, what I said before with the innovative impulse that is needed, the problem is we have actually also at this point exhausted much of the innovative potential in many ways. For example, the television hasn't developed much since switching to LCD displays. So the first biggest leap was the expansion or the development of color TV, and then to LCDs. And everything after this is just like increased resolution and maybe the integration of the internet on television devices. But other than that, this device hasn't developed much. The mobile phone turned into a smartphone, which was a great innovation and spurred definitely growth in many sectors, as well as the internet, as we can see with social media and marketing channels, and basically the economy switching more and more into the online mode. But here again, because everything within economies was so focused on pure consumption, the idea of quality consumption was pushed further into the background. So it was more like just spend your money, regardless of what it is, rather than on things that really matter, and basically also give the market the incentive to push for more innovation. These are, for example, televisions and smartphones are consumer goods, but there are also many other sectors such as space, or as we can now see, artificial intelligence and robotics and everything. They lag behind because they are not really consumer-oriented industries, but rather B2B or military industries. So even though they developed, they were not part of or not that integrated into the consumption cycle that actually kept the capitalist system going. And because of that, obviously research and development was also pushed further into the background. And I remember there was this one article that I read back in my university days from Hans Morgenthau. He was one of the more influential political scientists in the 20th century. A very smart man, and he basically said that the problem with scientific research and development is that it is more and more interest-oriented than curiosity-oriented. We have the problem that scientific progress is always tied to some sort of funding, and funding always tries to direct you to a certain extent towards some kind of interest. These might be material, meaning that when a company or a government invests into a certain project, it expects monetary return. So if that is something that is going to sell quite well, or is projected to sell quite well later on, they will invest. Or, and this is the second option, there are social or political interests or ideological interests that play a role in that investment. And because of that, the actual purpose of science is undermined at that point, because science is science is driven by curiosity and the interest in knowing more just for the sake of knowing it. And if we think about science in economic terms all the time, science is less able to also spur economic growth through new innovations and impulses, as it was the case with basically all major inventions that also changed the course of economic history. And I think, and we can come to an end at this point of this discussion, and I think with the incredible amount of wealth that has been acquired and accumulated over the last couple of decades, with the massive expansion of national economies, with the massive expansion and connectivity of the, let's say, the biggest social classes, we have reached a point where wealth and material comfort has been so normal that we even about to enter a stage where luxury goods are going to be normal for at least the middle classes of many developed and industrial countries. And because of that, and that is the idea behind the Rolex theory, and because of that, we might experience a downturn because people are too used to all of these things, and because the necessity to spend money on these kind of products and services is declining. The capitalist systems of the world are actually in front of a very serious challenge. Finally, how can we counteract it, or how can we react to that, or what is the logical consequence of it? Well, I don't think, and this is a normative thing. I mean, if you are very kind of enthusiastic about the capitalist idea, obviously the one thing that needs to be done is to innovate and to produce sensible and productive products and services in order to keep the economies going. And therefore curiosity is actually required. So it doesn't need to be the focus to develop a product and sell it, because that would kind of limit scientific progress. But just pick something that you are curious about, and once you developed it into something that is quite great, you can monetize it, and this is actually pushing economic conduct at that point. If you're more passive about these kind of things, you can watch out to kind of shift investments into regions that are non-European and neo-European. For example, China, and I've been saying this and this is no secret, I've been saying this for quite some time now, that I think that China is about to enter a crazy bull cycle, so lots of investment opportunities there. I think that China is going to be make a lot of people rich, just because they are still within that phase of pushing innovations, and they're just about to exit the mass production idea of economic conduct and push into the industrial type of economic structure. And because we're at the beginning of these kind of things, even though there are already big companies there, I think this is going to be a very interesting investment opportunity at that point, as well as other countries such as Turkey and to a lesser degree also India and Brazil. But shifting capital might be one thing. Another would be shorting the market, which is kind of risky, but it's nonetheless a situation that you can basically, you need to analyze it, obviously, but this is still an option. Or within the portfolios, or the idea or of investing in Europe and near-European nations, is to shift around to more innovative companies, especially around artificial intelligence and data handling and managing. So these are or cloud computing. These are the very innovatively driven sectors at the moment. So I hope you liked this episode about this economic discussion. Obviously, I would like to hear what you think about it, whether you agree or disagree. And obviously, this is a very complex topic that needs to be monitored, and we'll see how it actually turns out. It might be that the exact opposite actually happens, and there's lots more potential to capitalist systems that we are actually seeing currently. But nonetheless, a very interesting talk. I enjoyed it very much, and therefore I hope to have you back for the next episode of Aceto Magazine. Thank you very much for listening. Have a good one, and bye.